Hello, traders. Happy Friday. My name is Anna and I'm head coach at Leverage. Today, we are talking more about risk management. So, we are going to live trade and and we will talk about risk management. I will guide you through like different risk management approaches that you can use as a trader. And this is going to be more focused on as a prop firm trader because you have daily drawdowns, you have max drawdowns. So that means you need to apply your risk management based on those drawdowns. I hope where you are, the weather is good. I'm feeling like the spring is in a full bloom in here. It's actually 11 degrees outside. I know for some of you who are from more warmer climates, you'll feel like, hey, 11 degrees is not a lot, but it is really beautiful weather here. And I feel like sun is shining. The life is better, right? So what you can see here is a C-Trader. So I'm going to use C-Trader platform to trade today. You did read you could have read the disclosure before the stream has started, but if you're just jumping in now, then I do want to remind you that all the trades that I take, please do not copy them. This is just for entertainment, and if you attempt to take any trades, then use proper risk management. Okay, so let's dive deep into risk management, but maybe before that I could just walk through what has happened through the week in the charts. We had quite a busy week. A lot of like news came out, and in the market you can see, so these are 15-minute candles, okay, but you can see that market was moving a lot. Okay, market was moving a lot, and it's because there was some news going on, and yeah, this is the account that I showed you before. It's actually a little bit in the drawdown. I'm like 0.3% in a drawdown, which is normal, guys. Drawdown happens, and that is absolutely normal. So don't get discouraged when you hit the drawdown. But okay, let's start with some analysis. I will go with Euro USD first. Euro USD is such a popular pair, so let's see what Euro USD has been up to this week. I will start on 4-hour time frame. I will close this to make chart just a little bit bigger. I hope you can see enough. So really interesting situation. So in the beginning of the week, I did the live stream on Monday, and we set like our like key levels where I was like thinking what's going to happen here. So what happened was, as you can see, this support area right here, it was broken. So we broke, and now we are coming for the retest. And the way I read the market is simply I would be expecting something like this to happen. So once we come for a retest, then I expect the market will reject from it. Okay, and then if you look more to the left in here, see these all this all bullish movement in here, then you can see that the price went higher, and now there's a potential. If we move lower, the potential is to actually cover all this bullish move. Hey guys, thank you so much for joining. Hey, hope everyone had a great trading week. Yay! I did. This is my second week in a row where I'm ending in a profit after quite a challenging Q1. I can say that feels like the things are going back to normal. Sigma, good morning. For me, it's already afternoon, so it really depends where you are in the world, but yeah, it's morning for you, afternoon for me. But like looking at the EU, I'm really eager to see what is it going to do. And the thing is, now I'll tell you how I feel, a little bit of like emotions, trading emotions, right? So if I look at the chart, I want to be a seller in the market. I want to sell this, and today is Friday. So the market will close because Forex pairs, we're trading them from Monday till Friday, or Sunday till Friday. Depends where you are, okay? So for me, it's like Monday till Friday, and I really want to be a seller in this. I really want to sell the market. So simply because we have broken this 4-hour support zone, and if I go on a 15 minutes, like I want to see the price reach this area, and then I want to sell. But because today is a Friday, I don't want to push it, and definitely I don't want to hold the trades over the weekend simply of what is going on in the world with the world events, because that affects our price movement, right? So, and I don't want to hold over the weekend. So I don't know, guys, if you have experienced something like this before, but I'm really in the stage where like I want to sell this. I really do. I want to see the price to reach this area and then I want to sell this. But at the same time, I don't because I am running out of the time. I know it sounds dramatic, but that's what it is. I really want to be a seller, but today's Friday, so I don't think I'll be able to get in the trade because I definitely don't want to get in and then, I need to close it because the weekend is here. So anyhow, so this is my Euro USD. So I just quickly want to show you again the 4 hours. So again, I just think there's definitely more potential. Okay, and listen how I'm talking as well. So I'm not saying 100% because nothing in the trading is 100%. The price will go down. I'm just saying that there is a potential because we see this support broke. Okay, now the price is coming for the retest. So it's pulling back for the retest. And now I'm anticipating the move down because looking left, there is all this move in here that it could potentially fill this move. Okay. So, and I think it's really important for the traders. And I've learned this, the way I analyze the market, I always need to have my bias like 50-50. Obviously, what happens then, like you come into the market and you're like, well, this could, at the same time, this could go like this, right? We could not retest and the market will just keep on going higher. So I think it's important the way we talk that we don't start to fool ourselves and we're like, well, yeah, I'm just waiting to be a seller and I'm, going to do this. So I think it's important to speak in a way where there's always a 50-50 chance. So basically it means that if I don't get my confirmation, the price can move higher. And then I need to adapt and I need to react to the market, what the market is doing. And then I can see maybe I can be a buyer in the market. Okay. If this fails as a pullback, then I can be a buyer in the market. So I think it's really important not to get married to our bias because that will affect how you manage your risk. And I will look into it like a little bit deeper in, but I kind of wanted to talk. And I know the risk management topic on a Friday may be a bit topic, like the heavy topic, but I think it's just such an important topic to talk about that it's just really important to understand that risk management is not only numbers game. There's much, much more to it. So, and that's what I'm saying. It's really important how we talk to ourselves when we analyze the market. So we actually don't hurt our decision making by being too biased on one side. Okay, anyhow, so my bias for this is more bearish, okay? But anything can happen. Now let's look at the GU. Really same situation in here. So let's start on 4 hours. But look at this. So it's like a really tricky situation in here. So this was like my support area that I was thinking, it's most likely going to break this. But if I really zoom in, so what happened? See this wick in here. If I put the line on the lower wick, okay, I waited for the candle closure for the candle to close below, and it never did. Like if I really, really zoom in, you can see that this line was never broken. It just wicked above it. So technically we did not get a break. And what price did, it just moved higher and it went bullish from here, okay? As where we look at the Euro USD, you can see that that was actually broken. The support area was broken. And why do I jump from Euro USD to GU, like EU to GU? Because they normally move the same way, okay? So if EU is going down, the GU most likely will, because one thing is Euro USD, GU USD, right? So because the USD is opposite, right? So anything that dollar does, either stronger or weaker, they do tend to move the same. Okay, and that was interesting. Like this never was broken. So if I would go in my 15-minute time frame, I actually had a buy opportunity. And I did, you guys. I actually did bought it, and I want to show you this. So deal map. So I was a little bit late in the entry. So, but this bullish candle here was the confirmation that the market will go higher, okay? Because that's how I trade, and I got my confirmation and I entered. And unfortunately, I was stopped out. And then as you can see, one of these trades that I really don't like, when you're correct on your bias, but market first wicks you out and then goes your direction. But it is what it is. With the proper risk management, okay, with the proper risk management, we can manage our risk and we can make sure that these moves, these things that happen in the market very often, they don't affect us, because we're using proper risk management, and I'm willing to take that risk. I'm willing to take the loss, and I'm willing to risk whatever amount I risk here to be able to make money. And if I lose, I lose. I just move on to the next move. Hopefully that makes sense. But yeah, I really wanted to show you this, that the support was held. I entered because it was just clear that the price never broke. And what it did, it just wicked. And I know in here's 15-minute chart, it looks like it did break, you know, because the candles are here broken. But I always focus on higher time frame analysis. So in this case, this support was not broken because this wick was not broken because the candle never closed below it. So yeah, really interesting situation here. So I wanted really to share that with you. But with the proper risk management, I was able to, you know, just take a loss. And I sometimes laugh. I take the losses as a pro, like I really do. And you know, I would not be telling you the truth that I would say I've always in my trading journey, I've dealt with losses very well. That's not true at all. I have had my moments. I have cried on the floor, and I have laughed hysterically on the floor because of my losses. So it's like I've been there and I know how it is. But that's why it is really, really important to talk about proper risk management. And that's what I really want to talk about. Unless you guys want me to analyze like another chart, we can look at gold. We actually need to look at gold. Let's quickly look at the gold. Let's see, where is gold? That's Forex, metals, gold. Okay, it always does this. Wait a second. Where is gold? I can't find. Okay, there it is. And new chart. Okay, so gold did a thing. But some traders even laugh that gold is now moving like a crypto, right? It's crazy. So we reached the highs, was holding the support. I mean, this is such a perfect example of the zones, right? So this was our support right here. I'll fill it in. Transparency like so. And you can see in here, this was such a nice support. And what it did broke clearly, like these wicks are broken in here, came back to retest and then moved lower. Okay, so this is really interesting what the gold is going to do. We can either always, right, to go higher or to go lower. But I think for the gold at this moment is, I mean, you could take this area, I guess. Let me see, copy, paste. So you could take this zone right here, right? Because you can see there was a rejection. We broke, retest, pushed bullish, came to retest in here, pushed bullish, broke and retested this, went lower. And again, we're like really jumping around in here. And I would say dancing around. This is not really the good market condition, right? Because we're just doing the ping pong thing, and market itself is deciding, is it going to go higher or lower? So we're just like, it's like the silence, what is it? Peace before the storm, they say, the silence before the storm, or calmness before the storm. So I think that's exactly what's happening now. We're just calm before either we're going to go bullish or either we're going to go bearish. But at the moment, when you look at this, we made the high. That was all-time high. Try to retest it or make it another one, failed. So this is our lower high. Then we're breaking structure, retesting. So this is another lower high, right? We're moving lower, another lower high. So that's why I think reading this, it just tells me that there's probably more, I think more, we could see the bearish move, but I don't want to say anything, you know, because the gold is bullish. And I just noticed I was on 1 hour chart. In 1 hour was moving really well. I thought I was on 4. Hey guys, you live, you learn, right? So on 4 hours, yeah, kind of the same zones as well. So I guess that's fine. Oh my goodness. So this would be the first retest on 4 hour zone. But yeah, still more bearish. I think we could do the fill this move in here, like same in the Euro USD. If we do move lower, then fill this move in here. So yeah, we'll see. Anyhow, I have a coffee with me. If you're coffee drinkers, you're my people. I'm a coffee drinker. You know, like sometimes I laugh and I'm like, hey, my name is Anna and I'm a coffee addict. If we have any addicts in here, let me know. But coffee is good. Okay. Right. So now I'm going to demonstrate you some of the like risk management strategies that you can use as a trader. And Trader is a great platform for that because we do have built-in risk management tools. So basically, it just shows you how much you can risk. And I just want to open the trade. Now, this trade will have no analysis whatsoever. We are just going to wing it, right? For the sake of example, I'm just going to show you how to manage the risk, okay? So for example, let's do some kind of analysis. So it's not really, you know, so unprofessional. Let's do some kind of analysis. So let's say we are, you know, we are in this area in 15 minutes. Let's try and find some kind of support. And let's say now the price is rejecting. Okay. So I'm just trying to find something here so it kind of makes sense. Okay. So this is our like support. We see that it broke and now we came for the retest. So I'm going to be selling. I want to be a seller in the market. Right. So I want to risk 1%. I have 99,762. You don't need to do the math yourself, okay? What we do first, we will decide where are we going to put our stop loss in place? Where is it going to be our stop loss? So if I sell right now, where do I want my stop loss to be? And I think I will take it above this wick in here, okay? I will zoom in for you guys so you can see a little bit better. So I will choose my stop to be above this wick, right? So, okay. And I will use horizontal line just so it's a bit better. So above here, so that's why my stop is going to be right there. Now what I do, I click and I count how many pips the stop is. And stop is 15 pips. So what I do in here, I will write 15 pips, okay? I go in there. And then I will set lot size starting with smaller lot, which is 0.01 lot. And I know that there's a 15 pip stop loss. Now what I need to do, you will see here in percentage. So let's say I will put 5. And this shows me that there's 0.75%. Sigma trader, you're my people. Power coffee for me just now, only 2 each day. You know what, I used to drink only 1, now I drink 2, and sometimes when I go to the coffee shop then it's 3. But like really what I'm also trying to do is to take like decaf sometimes when it's like 3 cup of coffees. But I mean 1 is for sure. If I don't have 1, I'll have a headache and everything, you guys. I'm terrible. Okay, need to enter the trade. Okay, coffee is distracting me. Need to enter this trade. So we're going to risk because the price is already going lower. Let's say I will adjust my stop now to 16 pips. Okay, and now I can see that I'm risking 0.80%, but I want to risk 1%. So what I need to do, I need to increase my lot size. So I'm going to do 0.80. Okay, almost like 93%. So I'm gonna do more. So it's going to be a lot of clicking, right? 6.25 lots. I'm risking 1,000. Okay, and I'm placing my order. Order is placed, and now I need to place my TP. I want to target, actually I'm going to target these lows in here. Okay, right. So okay, so what I have done now, I have entered the trade based on what risk I want to put on. Bulletproof. Wait. Bulletproof with butter and coconut oil. Wow, that's awesome. Butter is like, I love butter. Okay, butter like goes everywhere. Like I like to cook with the butter, and I like to use it on my like my toast, and just add it anywhere. Like, or making an omelet, always add like a butter. It's just great. But coconut oil, it just gives that taste. Like it's so strong that it feels like I can only use coconut oil when I'm doing like cookies or like baking, like more like I don't know, either a brownie or something like that. But when I use coconut anywhere else, it's just weird. But butter, I love the butter. Anyhow, back to risk management, guys. So now because we're selling, and I decided to use 1% risk, and then you could like really see how easy it is. Oh my goodness. I'm usually 3 to 5 coffees a day. Yeah, you're definitely an addict, definitely. But I guess same goes for the tea drinkers, right? When it's like a black tea with the milk, especially if you're British, right? You probably enjoy your black tea with the milk. Because I've lived in Scotland for 12 years. I definitely was a tea drinker, but now since moving back to Latvia, I just don't drink black coffee with milk because it tastes different. Maybe it's the milk or something. I don't know. Anyhow, guys, you need to stop distracting me with all this coffee talk, and we need to look at the risk management. So, and I'm really sorry for those who just want to be here because of the risk management, and Anna keeps on talking about coffee. But anyhow, so you can use this approach where you just set the risk, for example, 1%. And I don't want to, give you ideas or anything like that, but I think 1 to 2%, it's okay risk based on your data. So for example, to just explain what I'm saying here is if you know that your losing streak is normally average like 4 trades in the row, and let's do a little math now in here. So you know that maybe you take 1 trade a day, and sometimes you can go for 4 losses in the row. So if you lose 4 trades and you risk 1 trade a day, like 1 trade a day you take, and you risk 1%, then after 4 losses, you will be 4% down. And in propfirm, for example, let's take our junior portfolio manager, then you can have 10% max overall drawdown. So you're still safe, So that means you could up your risk to 2%. However, I think that is on the aggressive side. And I would say just use the risk, what you feel comfortable with. So 1% for me, looking at my data, I would say it is a little bit too high now because I have been going through more drawdown like periods. So let's say instead of like I used to have like 2, 3 trades in a row could be a stop loss, but then I would have 2, 3 take profits or some break evens in the middle. But now my losing streaks are longer. So now I can lose 4 to 6 trades in a row, right? So then I would not be really comfortable risking 1%. But this was just an example, so that's fine. Okay, so again, if you want to risk based on percentage, you can use CTrader to help you calculate your risk, right? Then that basically it will calculate the lot size for you, and you will make sure that you can enter with the right lot size. Okay. Now another approach, what traders are doing, they're actually trading set lot size. So now I'm going to go to the Euro USD and just will show you what the traders are doing. Okay. So if you know a trader who if you are a trader, okay, if you are a trader who is, for example, scalping, and you know that normally the ranges that you scalp in is based on pip. So you just take and measure the pip, you take a measuring tool and you see, for example, this range here is 63 pips. As a scalper, maybe you're not gonna scalp this, but you can maybe scalp this range in here, what's happening right now, and it's like 17 pips. So what you do, you trade with a set lot size. And I mean, if you know that you're risking multiple trades, you're opening multiple trades, multiple ranges, then let's say you need to find that lot size that is good for you. And what I mean good for you, that you can afford to lose. So you need to calculate if you're risking one lot, and sometimes you have like 100 pips ranges, that means you're risking with 1,000. And if you're trading on 100K account, then 1,000 is 1%. So you need to decide what set lot size you want to use. So for example, I'm going to use 0.15, so half a lot. Okay. And I will take this risk in here. So I'll be selling, obviously, because I think the price is going to go down. So I don't want to just guess it. And we will take like this range, let's see, a little bit higher in here. So like this candle, we'll take it. And then you only will be trading with your set lot sizes, because that's how you trade, based on the ranges, based on the pip values in there. So first example, like this one on GU, was where I calculated risk based on my stop loss, right? So if I want to risk 1%, then I just adjusted my lot size based on the stop loss. And if stop loss, there's this saying, and I always say it, the bigger the stop, the smaller the lot, right? And the smaller the stop, the bigger the lot. So you will need to trade much bigger lot size when your stops will be tiny, okay? But again, also a really nice approach for trading is where you just trade with a set lot size. And it just helps you. But normally I would say the set lot size will be for traders who are more scalping or day traders trying to like get in the trade and then hold it longer. But yeah, there's definitely, you can find your own way. But still, I want to say that to find the risk management that suits you, you need to look through your data. And for myself, what works the best is this approach where I calculate it based on my, I just set my risk. I want to do 1% per trade, right? And then I use the lot size based on how big is my stop loss or how small is my stop loss. And then I use the risk calculator to calculate what is my stop loss size and what is the lot size that I need to trade. So for me, just naturally, this approach makes more sense. But I know that there are people who will be doing this. And now I want to talk about another approach. Let's go to US 30. Now, there will be people who will be trading like this. So you will take, again, like a set loss size. Let's do 0.02, okay? And what you will do, let's buy this because we're selling everything else. So what you will do, you will just open multiple trades and you will use like bigger stop losses, okay, like so. And you will target smaller targets, which is called negative risk to reward. So basically, you are risking, in this situation, I'm risking $123 to be able to make 35. So see the difference in here? It is negative risk to reward because you're risking almost four times more than what you're willing to make, and it's a negative risk to reward. And what traders can do with this is just they can either stack the positions, so just open more and more positions, like so, place another. And normally for this approach, they would be trading like very much lower time frames, right? So, and once the price is like going a little bit against them, they're just adding into position now. So now, currently, let's say I will add again, and let's look. So for US 30, I have 1, 2, 3, 4, 5 positions. Okay. So, and as the price is like going either against me or in my direction, I'm just like adding as the price is going. And once there's like a smaller profit, because we're trading like negative risk to reward, then we're closing our trades accordingly. So negative risk to reward, I used to really be like, oh no, just don't trade negative risk to reward. But now I'm much more open about it because I've seen traders making a good progress with it. But I think if you want to trade negative risk to reward, you really need to work on your psychology. You really need to work on yourself so you are able actually to close out and to take these small positions. Now, for example, like so, I want to wait. I want to close this position. Okay. And then I want to close another one. And I'm just going to leave the 3 ones in. And I'm going to set my take profit, for example, in here. And then you can maybe move your stop. It's so low that I can't even find where my stop loss is. Where is my stop loss? I don't know. I even don't see it. Oh, no, I haven't set the stop losses for these ones. Okay. So, like so. Okay. And then you can either move your stop loss lower to make that risk to reward kind of even out. But I do want to say the negative risk to reward traders, it is not a bad risk management at all. I think it's great if your data tells you that you win a lot instead of like you win way, way more than you lose more, because otherwise if you will lose a lot and make just a little bit, the negative risk to reward doesn't work. You simply use the negative risk to reward because you almost want to win. And I would say to be really successful with it, you need to have like 90% win rate, which is really, really high, really high. Okay. And then as it goes, you can just close it out and you can take these small profits. You're risking a lot, but you can take these small profits. And going back to what I said about the trading psychology, when you are trading negative risk to reward, you do need to understand that the emotions might kick in, and sometimes trade will go really against you. For example, it's going to push really lower, and then I will end up just doing place another one, place another one, place another one. If it goes really bad, then what I'm going to do, instead of keeping my stop loss in here, okay, what I'm going to do, I'm going to start to move my stop here and here and here. If this sounds something familiar that you are doing, please think about once again to trade the negative risk reward. Like, I mean, don't think about it. Don't think about trading negative risk reward if you cannot control your emotion, and if you will keep on changing your stop loss, or if you will keep on adding, or you'll be like sitting on trades and now doing another thing where you're like, oh, but it's okay. I want it to take my profit in here, but I'm going to do the same thing. I'm going to put my profit higher and higher and higher again and again, because you're getting greedy and you're seeing, whoa, I'm already $1.40 up. Why not just keep it running, right? And from my experience, like, I know that market is never, like, we cannot just know what's going to happen, because literally anything can happen. We can do our best analysis, but like, that's why we need to have this risk management, and we need to make sure that we're managing our risk carefully. Okay, I'm gonna get out of the trades of all of them. Okay, and now I want to talk about really best risk management approach. And you know what, let's see what this trade will do. I did close it. Like, this is not really a good analysis, okay, guys? This was just guessing game here. So while we're still live, and I'm kind of trying to wrap this up, I don't want to keep you too long on a Friday, because I want you to go out and enjoy your Friday, okay? I do want to wrap this up and say that the best risk management is something that you find working for you, because I might be here saying, hey, but this risk management approach is the best for me, like to set the certain percentage and then risk with whatever percent I decide to do based on my data. But I think, again, we are so different as traders. There are so many strategies, there are so many approaches how we can trade, that it is important to find the risk management that suits you. And the best risk management approach is something that suits you, not me, not someone else, not that trader, not those traders. It's all about you. And when I say it's all about you, it's also not just like, okay, well, today I decide that I want to risk 2% a trade and I'm just going to use this approach. It's also not that easy. The best risk management approach is also not only found from what you feel comfortable doing, but what is your data telling you. So if you know that you're trading negative risk reward, but you have really high win rate, then yes, you can try and start to approach maybe adding bigger, like risking bigger, or maybe other way around. You need to just risk a little bit less because your win rate is not just as high yet. Or you can find maybe you feel more comfortable risking with set lot size, so you don't need to think about calculating the risk, and maybe it is confusing you. But also, again, any decision that you make, it needs to bounce from the data. So let's say you just cannot say, well, okay, I'm just gonna, leave my trades open because I just feel like I want to do that. No, as traders, you have data, you collect the data, and you look at your past results, and you know that if your results are good, when you, let's say, remove your TP and you just let it run because you think you're going to be correct on your bias, then yeah, go ahead and do that. But I think any decision that you make as a trader, it has to come from the point of your data, and then you can make a decision on what kind of risk approach you want to use. And especially if you are trading with the prop firm, then you need to make sure that the risk that you're using is actually within the prop firm rules. And at Leverage, we offer 3 programs, which one of them is Junior Portfolio Manager, Senior Portfolio Manager, and Executive Portfolio Manager. They're all different, built for different traders. And so if you, for example, want to trade Junior Portfolio Manager, then your maximum drawdown will be 10% and your daily drawdown will be 5%. So if you're someone who wants to risk 10% a day, well, you can't, because the rules are clear. It says that you are only allowed to risk 5% a day. So you need to make sure that you are adjusting your risk accordingly to the rules that are set for each program. And for example, like Executive Portfolio Manager, the overall drawdown is 6% and the daily drawdown is 3%. So if you're taking like 5 trades a day and you're risking 1% per trade, most likely if you go on a losing streak, you might lose it in a day. So the risk management is for sure really, really important for us as traders. And it's not only what we feel comfortable doing, because I've seen traders risking a lot and they say, I'm just comfortable with that. Yeah, okay, that's good. But is your data supporting that? Can you actually risk that much if your data is telling you that you can go on 10 losses in a row? And I just want to put myself as an example here and tell you how I dealt with my risk when I was trading. I mean, I would trade like 1%, right? So I would trade risk 1% per trade, but then going through massive losses, and just honestly, it was like the worst time for me, right? As a trader in my trading career, I would say. I needed to make a decision and I drastically cut my risk, literally to 0.10%. And what it did for me, it allowed me, first of all, collect more data on my strategy just to see if it's working. But I would not get overwhelmed because I knew that I'm not risking really much. It's like only 10% of 1%, like 0.10% risk. So it's like it's not going to hurt me, even if I lose 20 trades in a row, right? So it's only going to be 2% loss instead of like 20, right? So I think it's just really important to make a decision what kind of risk management approach you want to use based on your data, and also something that helps you as a trader. So for me, I can risk 1% when my data is telling me that I am actually, doing good. So I have maybe 3, 4 losses in a row, but then I can make it back in 1, 2 trades. So it's just, again, it's really important to look at the data that you have as a trader and then decide from there. Because the least thing I want you to do as a trader is to say, you know what, today I'm going to use this risk approach and I'm going to trade this. And then the next day you go like, well, and today I'm going to use this risk approach and I'm going to do this. So any decision that you make in trading has to be backed with the data. It has to be backed from the experience that you've already had in the market. And if you don't have data, then it is time to start to collect the data. It is time to forward test or back test, but really have a journal where you keep your trades. And guys, I'll tell you this, if you say that your journal is either C Trader history, like so in here, if you come to me and tell me that this is your data, I'm going to be angry. I'm going to be angry. You really need to have either a spreadsheet or a journal. You can use Notion for that, which is a free platform, and you can start the journal in there, but you need much more than just the trading history. Also for the prop firm, if you want to collect the data with the prop firm, you can actually do so, and you can use our dashboard as your journal. But still, I think it's so important that you have a certain journal where you put all your data in, because from there you can make the best decisions, right? So, and it's like, think about it like this. I'm a builder. I'm just giving you an example. I'm a builder and I have tools. Now, think about what kind of builder am I going to be if I don't have tools? Probably not a good one. Like how on earth can I be a builder? The same for the traders. I'm a trader and I don't have data. What kind of trader can I be if I don't have data? Right? So it is important to have those tools. It is important to have the data. So then we can find different risk management approaches. We can find what suits us better based on our data, based on our experience in the market. Okay, I think I'm done. I think I'm done talking. I feel like I talked for way too long. But yeah, that's pretty much it for today's session. I hope you took away something. And I think I need to leave you with this, that if you are trading, then please use proper risk management. And the risk management one that really suits you, not me, not other traders, but just figure out what suits you, because there is so much more to risk management than just like doing the numbers. Like you really need to think, do you feel comfortable risking that much or that little? How does it make you feel when you see a losing trade? How does it make you feel when you see a winning trade? So it is just really, really important that you figure it out for yourself. So I will leave you be now. Thank you so much for joining in. I really appreciate it. Oh, thank you. Awesome. Great session. Another great session, Anna. Thank you. And guys, I do want to say, if you have any suggestions at all, then you can actually, there is a link in description to join our Discord. And when you join the Discord, there is suggestions channel where you can fill in the form. And in that form, you can suggest either live streaming, what is it called? I'm losing the words. It's Friday. I have Friday in my brain now. You can suggest like live training sessions, what we can talk about, like the topics, also the webinars, or you just can give me the feedback on if you need help with C-Trader or if you need help with any of the programs to understand. So yeah, anything at all, please join the Discord and then fill in the suggestion form. And I will leave you be. Have a great weekend, guys. Do your weekly analysis, your weekly review, and I will see you the next week. Thank you so much for joining and take care. Bye.